with Warren Buffett, Ray Dalio, and many other big names in finance all adding gold and gold miners to their portfolios, as well as the amazing growth we saw in 2020. I'm here to tell you why I'm bullish on gold and why I think gold should have a place in every investor's portfolio. I'm also going to discuss some different ways to invest in gold, as well as how I plan on maximizing my returns in the upcoming gold boom. Hey guys, welcome back to the channel. For those that are new here, my name is Zeng and I make weekly videos on the topics of personal finance, investing and creating wealth. So if that's something you're interested in, definitely hit that like button right there and subscribe to my channel for more content just like this. I'm going to break the video down into two parts. The first part will explain why I'm so bullish on gold. The second part will discuss some different ways to invest in gold, as well as my newest stock purchase in New Quest Mining. Let's start by talking about the crazy world that we're living right now. Since 2012, all the central banks around the world have been printing money like crazy. We're talking about trillions and trillions of dollars being printed and injected into our economies. So what does all of this have to do with gold? Well, gold is an asset, and when there's a huge increase in the money supply, it puts upward pressure on asset prices. And we have seen this in just about all asset classes: real estate, the stock market, cryptocurrency, as well as precious metals. Another reason why gold is important is because of its scarcity value and its limited supply. The central banks around the world can print as much money as they want, but they can only mine so much gold every year, and there's only so much gold for us to mine. It is a finite resource. As the central banks around the world continue to print trillions of dollars and adding that to our money supply and decreasing the value of our currencies, many people are now looking to gold as a way to protect their wealth against inflation. As a lot of you guys already know, the world is moving into a cashless society. While not having to handle cash reduces the chance of us losing it, getting robbed, or catching a deadly disease through handling dirty pieces of plastic, it also means that every transaction will now be recorded and monitored. This means that our governments can now print money out of thin air, and this centralized currency can now be monitored, giving us no privacy at all on how we want to spend our money. While most of us have nothing to hide, there will be those who want to keep their spending and their wealth private. I'm not talking about a few drug dealers going out there and buying a few bars of gold. I'm talking about the world's elite and the world's top 1% who might want to keep gold as a store of value. With gold being a finite resource and the world moving into a cashless society, I personally believe the demand for gold is only going to increase in the coming years, as more and more people try to get their hands on this precious metal. Now let's talk about something that you might not know. The people who are buying up all the gold in the world are not the top 1% or our everyday consumers, but instead the central banks who are buying up vast amounts of gold. From 2018 to 2019, the central banks around the world added 1,300 tons of gold to their reserves, the highest shift in over 50 years. Before the 2008 global financial crisis, the central banks around the world were net sellers of gold, and this has been a trend for decades. But after the 2008 global financial collapse, the trend reversed and another gold rush started. As some of you guys already know, there are rumors out there saying China is secretly hoarding gold and have a plan to create a gold-backed digital currency to compete with the US dollar. Not to mention the massive shortage of gold and silver we saw back in 2020, where gold dealers pretty much had nothing on hand. In fact, this is still an issue in many parts of the world. So why did gold become so popular? I believe the main reason is the massive increase in uncertainty, as well as the decrease in confidence surrounding fiat currencies. As the world printed more and more money in the years that followed the 2008 global financial crisis, the concerns of inflation or even hyperinflation became a real possibility. For those who are unfamiliar with hyperinflation, this picture sums it up. When the government prints excessive amounts of fiat currency, it decreases the value of that currency. And in extreme scenarios, this can lead to average citizens pushing around a wheelbarrow of cash to buy everyday household goods. This could never happen to gold because we can't create it out of thin air. And I believe the central banks around the world have a similar theory, and they have increased their gold reserves as protection against hyperinflation. An insurance policy almost for when people start losing faith in fiat currency. And that, my friends, is why I think every good investor should have a bit of gold in their portfolio. It doesn't have to be a huge amount. I personally only give gold an allocation of around 10% of my total investment portfolio. However, our circumstances are a bit different, so I will encourage you to do your own research and find out what amount and what allocation is best suited for your goals. Now that we have discussed why gold is important, let's talk about some different ways we can invest in gold. I personally invest in gold in 3 different ways: buying physical gold and storing it in storage facility, buying gold ETFs that hold physical gold on your behalf, and finally, investing into gold miners that mine the gold. Let's go over each of these in a bit more detail. One of the easiest ways to invest in gold is to go to a gold dealer and buy physical gold, and then storing it in a secure location. Of course, the gold dealer is going to charge you a premium of the spot price, but that should only be around 1 to 2%. The second way to invest in gold is also extremely simple, and that is to buy some gold ETFs. You will need an online brokerage account, and there are so many to choose from. I generally just use the brokerage service provided by my bank. The ETF that I purchase is the ETFS Metals Securities with the ticker symbol GOLD. I personally like this because it is the largest gold ETF in Australia, with over 1.8 billion in funds under management. It is also an ETF that holds physical gold in a vault under your name. And as we can see here, the performance of this ETF has been extremely good over the last few years. And last but not least, the final way to invest in gold is to invest in the gold miners that actually mine and produce the gold. Investing in the gold miners is definitely more risky but more exciting than investing in gold itself. So we'll strongly encourage you to do some research of your own before deciding to invest in any of these gold miners. With that said, if you decide to invest in the gold miners, you will see much better returns if the gold price was to boom. And by investing in the mining companies, you will also get a dividend. When we invest in the miners, our risk and our reward are both multiplied. If the price of gold starts to increase dramatically, the price of the shares for the gold miners are going to increase by even more. But at the same time, if the price of gold starts to drop, the share price of the gold miners are also going to drop by even more. The gold miner that I personally like and I purchased recently is Newcrest Mining with the ticker symbol NCM and a market cap of just over $22 billion. Newcrest Mining is an Australian-based corporation which engages in exploration, development, and mining and sale of gold and gold copper concentrate. Outside of its Australian operations, the Aussie miner also has operations in Canada, Papua New Guinea, Indonesia, and Africa. The corporation also had a very impressive performance in 2020, producing 2.2 million ounces of gold at a cost of $860 per ounce, and generating an underlying profit of $750 million. As we can see by the cost to produce 1 ounce of gold, if the price of gold was to start increasing dramatically, the profit margins of these miners will also increase dramatically, and the value of their balance sheets will also increase quite significantly, because we got to remember that these gold miners usually have large amounts of gold on hand. Guys, we are almost at the end of the video. I just want to give you guys a quick breakdown of my gold portfolio. I personally aim for a 10% allocation towards gold and other gold related investments, and that's 10% of my net worth. And I break that down into 40% into physical gold, 40% into gold ETFs, and 20% into the more risky gold miners. As always, I am not a financial advisor, and this is definitely not financial advice. I'm just some guy on YouTube sharing his personal opinion. This brings us to the end of the video. I want to thank you guys for watching till the end. If you guys got value from this video, please do me a huge favor by hitting the like button right there and subscribing to the channel, and let me know in the comment section below what's your opinion on gold. Are you as bullish as I am? I wish you the very best on your investing journey, and I'll see all of you guys in the next video.